You'd be hard-pressed right now not to find a technology stock that isn't sitting at 52-week highs or at least near it. And in this video, I'm going to be going over a very heavily requested stock that is trading on a big dip right now. And one of the main reasons I think it's trading on this dip is a little bit of collateral damage. It isn't necessarily anything the company has done themselves, but there's been a bit of issues in the space it operates, potential issues, and I do think that it could potentially be an opportunity moving forward. This is another bull versus bear case video. I have not done one of these in a while, and the company I'm going to be going over today is Topicus. This is a vertical market software company that trades on the TSX Venture and has grown at a crazy rate. But there's a lot of headwinds right now, potential headwinds that haven't exactly come to fruition that is causing a drag on the company's share price, and I have been adding more. And as always, everybody, if you want to see all my moves, how much Topicus makes up of my portfolio, you want to hop on the Discord, ask me some more personalized questions about it, I will drop a link in the description. You can get into Premium for 99 cents. It is one of the best research platforms in the country, and you're not going to want to miss that offer. But let's get started on the video. So what exactly is Topicus? Well, if you understand Constellation Software, they are a very similar company. They are a vertical market software company. So what this company will do is it will acquire vertical market software, pieces of VMS, which are effectively pieces of software that niche down and hyper focus on a very specific niche or need for a particular company. So when we think of a platform like Office 365, this is what they would call a horizontal piece of software, horizontal market software. And what this does is it satisfies the needs of a lot of companies, a lot of, consumers on a wide scale. But if you need something very specific, you often need to enter the vertical market, which is what Topicus focuses on. Now, one of the key differentiators here is the fact that Topicus primarily operates in Europe. So what ended up happening was Constellation Software acquired Topicus back in 2020. And then what Constellation did is it combined its European arm, the European arm that Constellation already had, with Topicus, and it ended up spinning this company out as its own publicly traded entity on the TSX Venture. So Constellation owns around 30% of this company and does maintain voting control. So we can think of this company as effectively Constellation Software, but it is kind of one of the main terms that's often used is its European cousin. But the one thing we have here is Topicus is much smaller than Constellation. I would argue it's more nimble, and it's also growing at a faster rate at this point in time. But with the company being smaller, with the company having largely overseas operations, and with the company trading on the TSX Venture, it tends to be a bit more volatile. So we've seen a bit more of a dip in Topicus's share price relative to Constellation Software's. And I won't go over too much why it's dipping right now. I'll save that for the bear case, but I do want to dive into the bull case. So the main bull case for a company like Topicus is no doubt its mergers and acquisition strategy. So this is a company that acquires vertical market software companies, integrates them into the fold, and these companies do not grow all that fast. They're not faster growers. Topicus kind of relies on sheer acquisition volume. So we can see the company has around 15% annual revenue growth, and only around 5% of that comes organically, 4 to 5%. So the remaining, 66% of the top line growth of this business is through acquisitions. So the core thesis for an investment in a company like Topicus is that you are relying on management to fuel future growth through acquisitions. So there is a very high degree of human element here, management element, and their ability to take your capital, whether it be invested capital or whether it be capital they've, free cash flow from their acquisitions, and they need to parlay that, I guess you could say, into companies with high rates of return. So because these VMS businesses are so small and so niche in nature, Topicus in a way has a bit of a monopoly. I don't want to call it an outright monopoly, but it's such a targeted niche that there is, first off, fewer players in the space, as you could say, for a horizontal piece of software, which is generally very easy to create, and competition is kind of high in that area. But secondly, it would be the switching costs. So Topicus works with a lot of healthcare institutions, municipalities, governments, things like that. And for companies to go away from these pieces of software, it is very difficult for them. The potential operational headaches they can have from switching pieces of software, having to learn new pieces of software, and the potential setbacks from the software not doing exactly what they want. It creates a high element of stickiness, a lot of annual recurring revenue for a company like Topicus, a lot of subscriptions that have very high renewal rates. I mean, we can look to this picture here. This is a law firm's program that Constellation developed in the 90s, and they are still using it today. This interface is still being used today. So that just shows you how mission critical a lot of pieces of these software are for these companies and why it is so valuable to acquire these companies. So the other bull case I would argue is the management team. This management team has a very long history of acquiring strategically VMS companies at very attractive multiples and growing cash flow internally. So when we get to a situation like Topicus, which already has a strong enough management team, and then you have somebody like Constellation Software who is pretty much the GOAT in terms of VMS software acquisitions over a multi-decade year time frame, you're talking about a team that has a lot of experience and a lot of knowledge and a lot of discipline to make strategic acquisitions and ultimately grow from them. We have seen plenty of acquisition-heavy businesses fail due to management slip-ups. I mean, the one I can think of right now is Enghouse. They've gone through some horrible troubles over the last while, but I have more confidence in a team like this that has been around for a very long time. So, the third bull case would be that they effectively have the exact same playbook as Constellation Software, and Constellation Software has done very, very well over the last 20 years. I mean, if you had invested $10,000 in their IPO back in 2006, you'd have nearly $3 million today. And since 2022, since the spinoff effectively, Topicus has quadrupled free cash flow available to shareholders, and it has tripled revenue. And despite this, because of the drawdown, it's actually only doubled in share price since this spinoff. So there's a bit of a gap in regards to growing free cash flow and growing share price, mostly temporarily in recent times. So the bear case is going to be very similar to Constellation Software, and that is the fact that AI is posing a lot of potential headwinds for these companies, especially in regards to coding. So there's a lot of fear that LLMs will allow companies, say clients of Topicus or Constellation Software, to create their own systems, their own VMS pieces of software effectively, because LLMs are very good at writing code. So there is some fears that this could deteriorate the moat. Now, the one thing I will say about this that will kind of put this to bed, at least over the short term, is there is a lot of commentary on the fact that these LLMs cannot debug code very well. So if you think of the idea that you are a government institution, a healthcare company, a municipality, and you're going to kind of go on your own, create your own code, and that code ends up needing to be debugged, and you have a mission critical piece of software that is not working correctly, and you don't have the expertise of Constellation or Topicus to fix that or modify it, you're relying on an in-house team. This is just not something that these companies are going to risk, especially the higher end ones, the governments, etc., over saving a few bucks. They're just not going to do it. Now, why this still remains a bear case, however, is the fact that LLMs are advancing very quickly. So who's to say half a decade down the line that they aren't good at debugging code and kind of fixing problems? And that would create more pressure for these companies, Topicus, Constellation, to kind of maintain a strong client relationship, or these clients could leave for, to create their own systems, bring their own teams in-house, and effectively run the software off a AI platform. So the second bear case would be the acquisitions, mainly the acquisition strategy. So if Topicus does not make acquisitions, there's ultimately very little growth here, and I do believe it does have a long runway, but there is a certain risk that either acquisitions dry up, VMS software companies dry up, whether it be because of AI, whether it be because of valuation multiples. Topicus doesn't really find any value in the market today as like ones that will meet its hurdle rate and exceed its, internal rates of return on what it needs to make an acquisition. So in this case, you could end up with the company kind of gathering cash and not deploying capital very effectively. Now, Topicus had this in the past, and they ended up issuing a special dividend, which the market did not like at all, because one of the main reasons people own this company is the fact that they make strategic acquisitions and grow cash flow through those. So you don't want to see capital issued through a dividend, because it could be a sign that the company is running out of options. Now, back then, obviously, this worked out to be kind of a non-issue. The company recovered quite nicely. But the acquisition strategy is no doubt a risk in combination with kind of the AI-related headwinds. Now, the final bear case, I guess, here, and it's kind of a tiny one, but this would be the company focuses primarily on the euro. So you're buying the company on the Canadian exchange, the TSX Venture, but the company's revenue generation is in the euro. So it is kind of exposed to a little bit of foreign currency fluctuations, I guess you could say. This could kind of impact results. You know, if you hold this over the long term, this might be mitigated because they tend to even out over the long term, but you could see short-term swings in results because of fluctuations between the euro and the Canadian dollar. So what are my overall thoughts on this company? I do believe it is one of the more attractive technology compounders in North America right now, especially at this market drawdown. There's a lot of fears that AI will replace a lot of the moat that Topicus has built up over the last while. I believe that is very short-sighted. I believe Topicus and Constellation in this regard will actually be able to utilize AI to become more efficient and actually serve its clients better. They're going to be much more effective at generating code. They're going to be, they already have that expertise of managing and debugging the code, but now they're going to be able to increase productivity on the production side much more with AI. And I do believe there is a larger moat here still than a lot think, and valuations from these companies have come down substantially because there is a lot of fears that AI is going to cause them to lose clients. And it is very hard to predict whether or not this occurs in a 5-year timeline or a 10-year timeline, but what is a very good assumption over the short term here is the fact that Constellation and Topicus are not only going to be able to not lose clients, they're likely going to be able to appeal to more clients by utilizing AI, leveraging AI to become more efficient. These major companies, mission critical software, they aren't just going to go out on a whim and decide to go on their own and develop these systems on their own. It's just not going to happen. Now, the company trading on the venture does a few things. It kind of keeps it out of the spotlight. I mean, this is an $11 billion company on the TSX Venture. I mean, I haven't exactly checked, but I would imagine it's the largest company by quite a wide margin on the TSX Venture. So it keeps it out of a lot of index funds. It keeps it, kind of out of the spotlight, very low analyst coverage, which tends to lead to opportunities. Yes, it leads to higher volatility, but it also kind of keeps it out of the spotlight that, higher valuation due to, a lot of potential people seeing the growth, a lot of inclusion in index funds, high growth funds, things like that. So it's kind of an under the radar play. And overall, I think right now the drawdown in this company is just kind of a situation where it's drawing down due to potential headwinds that we haven't even seen yet. I mean, we had Constellation kind of say they don't know about the future of AI, but they also mentioned that there's a good chance they're going to be able to leverage it to their benefit. And in addition to this, I mean, we have some of the best management teams in the country involved in this company in regards to Constellation. We have a very strong management team overseas in Europe when it comes to Topicus. So if there is headwinds, this company isn't just going to sit on their hands. They're going to be able to adapt and likely, whether they need to expand into the horizontal market, whether they need to, kind of integrate AI tools into their VMS software to encourage clients to stick with them. I think they're going to be able to do that. I mean, we've had these companies, especially in the case of Constellation, and the reason I'm mentioning Constellation so much in this video is because it has such a large influence on Topicus. We have a 20-year compounder, one of the best capital allocators on the planet that is in major control of this company, and they're going to be able to navigate this market moving forward. I've been buying quite a bit of Topicus over the last while over this drawdown, and I plan to continue to do so in the future. So everybody, that's it for the video. Hope you liked it. Head down below, like the video, subscribe to the channel, comment, let me know what stock you want me to go over next. And as always, there's that 99-cent offer for premium in the description, and we'll see you next time for more great Canadian content.